Let's also bring on board Vikas Khemani, then President and CEO at Edelweiss Securities, and chat with him about the market. Vikas, as flash in the pan as it may be, but we're at an all-time high for the markets and the index as well in particular, along with the mid-cap index. What's the feeling like that you're getting as we close in 2017? Is 2018 going to be as dream run as 2017 has been?
Hi. I think 2017 started on a very sort of back of a very pessimist kind of environment. We had demon and Trump victory, and 2017 has delivered. It is said that bull markets are born based on on the bedrock of pessimism, and that's what happened in 2017. The underlying bull market was on, but it started with a very negative note, and we have seen it has delivered almost 25-26% kind of plus return. And as we enter into 2018, situation is completely the other way around. The market environment is very optimist. There's a lot more positivity around it, and you are seeing a little bit more exuberance. So in that sense, I think you have to keep that in mind. I do believe that we are in the middle of a structural bull market. Indian economy has a great run over the next 5-7 years. You have to obviously remain invested into equities. 2017 probably was a year of re-rating and lesser earnings growth. So maybe 2/3 of the return came out of re-rating of the market, where a liquidity scenario or interest rate cut can be kind of catalyst for that, and earnings growth was a small contributor. And I think in 2018 you will see this change reversing. So maybe 70-80% return will come out of earnings growth, and small part will be from the re-rating side. So I do believe that earnings growth pickup is around the corner. H2 of this financial year itself should be much better than H1, and next 4 quarters of the calendar year for 18, in my opinion, will be very good. So you will see a broad-based earning recovery taking place, and that will basically drive the markets from here. So I too remain completely believer in the market. There would be hiccups and also that can't be ruled out. In a structural market there will be corrections, that one has to keep in mind. But I do believe that 2018 will also be a reasonably good year as far as the Indian equities are concerned.
So Vikas, where is it that you see this beta play out? Where do you think the sharper earning recovery is going to come in, something that the market is ignoring at this juncture?
So I think 2 parts to it. One is, I think, the traditional, even in the current financial year, if you take away the distressed sector out, your earnings growth are about 14 to 15% already happening. So I think in most of the distressed sector, like some of the large companies like auto exports or IT, pharma, some of the corporate facing banks, they have made kind of bottom, they made kind of base, and only recovery from here can happen. So I think the 2 factors. One, I think the sector which were pulling the overall broad-based earnings down will reduce that and maybe start contributing to the positive earnings growth. And secondly, there will be acceleration of earnings growth. More, some of the sectors like financials will continue to grow well. You will see, capital expenditure led, growth coming back, in a big way. So you will see, infrastructure spending contributing to, wide sectors for growth, whether it is EPC, whether it is cement companies, whether it is, allied sectors on that. So you will start seeing capex, especially on the infrastructure side, picking up well, and that will have an impact on fairly large set of companies. Telecom, which was a drag, I think, will probably start, stop pulling down and probably start stabilizing and maybe contribute a little bit to positive thing. So I think it's a confluence of reducing the distressed sector's impact on the overall earning, and acceleration of the overall economic growth as well as the corporate earnings.
As I remember, start of the year, you were really bullish on, housing finance as well as affordable housing, if I may use that terminology, as an overall segment. And I remember your conviction that just anything and everything to do with affordable housing is going to see an upturn. Is that conviction still there in this entire space, as large as it may be? Do you still believe that everything from HFCs to home improvement companies, they're all going to do well? Or do you think 2018, much of it is already, or rather, much of the gains are already behind us?
I think on affordable housing segment, what we have seen is not only a tip of iceberg. I think the large part of the activity is yet to happen. Currently, so far, it is only a bit of a initial stage we have seen. Still, the large stock creation has to happen on the ground. Obviously, last year government announced in the budget, and a lot of corporates are making plan to put up those projects. And as we see, as we unfold into next year and next couple of years, you will start seeing large scale projects getting shaped up. Government itself is driving a lot of creation of the stock, where they are giving the land and getting EPC companies to build, which will be distributed to the allottees. So I think affordable housing. If you government were to give 25,000 crores of subsidy, you assume broadly about 1.5 lakhs crores of stocks will get created every year, and that will have again implication on the job creation, on the construction activity, on the allied space like building materials, which will get consumed, obviously on housing finance companies. So I think it's a very big enabler of the economic growth, and secondly, the sector itself will offer lots of opportunity. So I too believe that this theme will continue to play over next couple of years. Anyway, by 2022 they are saying housing for all. So I don't think government is likely to leave this sort of initiative. And I think with 2019 elections ahead of us, probably this might get a little bit more acceleration in 2018.
Christmas New Year shopping has already begun at Edelweiss, with you buying into relegates commodity as well as broking business. But aside of that, I'm not going to ask you about that. But aside of it, as I see on your thematic bets, IT is a big contra view, and you're one of the only ones in the street who's betting on IT, because most are saying, even if they do believe that the prospects of the IT sector may be changing, that there are
many other bets which are more predictable in nature in the market, so you don't really have to stick your neck out to IT. Why is it that you believe that IT is a contra bet which is going to work in the next year?
So I think IT is by and large leveraged to the economic growth in developed markets, especially US. And as you would know, that US growth is coming back in a big way. Most of the US corporates are beginning to kind of shape up their growth plan in an aggressive way and beginning to spend money. So the commentary which we are hearing from and again a subtle commentary. I don't think people are going out of the way to kind of commit a big growth number at this stage. But we are beginning to see a change of the conversation, beginning to see a change of body language in IT companies. There was a lot of worry about the disruption of the existing business model to the new age technologies. So I think companies have been in this phase for some time, and a lot of transition is underway. We do believe that I think developed market growth will give reasonably good amount of order flow and new business to these companies. Secondly, I think given the global environment where we are today, I think you will see sort of a potential risk of emerging market currency weakening. And in that sense, this provides a natural hedge. We have a very unique situation where US current account deficit is reducing significantly, Fed is tightening the balance sheet, and emerging markets are fairly over leveraged. This is a very unique and very rare combination we have ever seen for long. And if this were to continue in the year, and which will, I think there could be a good chance of putting some sort of pressure on the emerging market currencies, and this could be again a natural hedge. So we do believe that under-owned stock, lot of under-owned sector, lot of pessimism, business side optimism happening in the developed market, and currency giving a natural hedge. So I think and valuations in your favor. So these are 4 or 5 factors. If I were to take, I think risk reward of investing into IT companies remain fairly in your favor.
Because my only reservation with the current construct is that everyone is on the same side of the board. I'm hard to find a bear. Nobody is realizing that equity as an asset class will come down. There are global risks which could take us back, and something unexpected could haunt us. There's a chorus that 2018 will be great. There's a chorus view that economy will go higher. There's a chorus view that liquidity will drive us higher. And that is what is worrying me. I don't have a data point to prove what could haunt us, but I'm simply sharing my reservations on this consensus view.
I completely agree with Nikunj. If you remember our 2017 view, and that time I had said markets are likely to give 14-15% return, and that was, I think, outlier. I remember that you are the most bullish guy I ever met. So I think always consensus view, I think is the one has to keep in mind. undoubtedly, and I started with saying that the 2018 starts with lots of optimism, and you have to be, careful about it. You have to be wary of it. You have to keep that in mind, and to that extent, you have to keep your return expectation, muted. But at the same time, if you become negative just only based on this factor, India story is not a 1 year story. In my opinion, we are 5 to 7 years of great economic run ahead of us. Most of the setup what is required for economic, I think, is ahead of us. So if this is the environment, while you should be aware about what's happening behavioral side, widespread optimism, I think money making has become very easy in this market. Tips are circulating all these years, so you have to be careful, you have to be worrisome about that, and you have to keep in mind when you are constructing your portfolio. So while I say this with all the consciousness that these kind of things can pose some sort of short-term risk, there could be some correction, and investors must be keeping that in mind while investing, that if you are you ready to take some sort of downside should global environment to change for a shorter term, should anything to go wrong. But I don't think this can derail India's story in a big way. I think India's story is here to kind of pan out. India's story is here to move ahead.
Vikas, it's almost New Year. You've got to give us a New Year present. You have to give us one stock idea.
Unfortunately, I can't give a stock idea, but I think I continue to remain very bullish on the rural economy as well. And there are many stocks around rural economy which have been doing very well, especially in irrigation, in around food processing. So I think there are ideas in that segment. I do believe the Indian rural economy is on repair, and over the next 4 or 5 years that also do very well. We will have multi-baggers coming out of that. So I do believe that look on those segments and sectors, you will do very well.
Stocks which have run up 160%. I guess we can read between the lines, and my producer as well got that, because Jain Irrigation is the stock that he just flashed. But Vikas, great speaking with you, and here's wishing you a very happy New Year from all of us.
Thank you very much, and wishing you and your team and your viewers a great 2018. Good luck.
Thanks so much.